Just over 1 week ago, the automated trades that were running on the Euro USD were modified to increase the stop loss to 40 pips and in line with the limit order of 40 pips. In this video, we will take a look at the performance over the last week with this revised strategy. But beforehand, this strategy was being used with a 20 pip loss, and what that demonstrated was that too often the position was stopped out of winning trades. Therefore, to address that, we opened the stop and the limit, or we opened the stop to 40 pips to match the limit. So if we take a look at the performance over the last week, so on Monday the 8th, the strategy was changed to 40 pips win, 40 pips loss. On Monday the 8th of November, the strategy was changed to the 40 pip win, 40 pip loss. And over that period, it has generated a profit of $537. So if you look at the performance over the last day or two, it helps highlight one of the basic weaknesses that the strategy has, which I'll discuss in the chart. So let us look at a timestamp. For example, buy to open at 10:09 is then 12:49 before the next opening trade. So let's take a look at this period on the chart. So between 10 and 12:01. If we take a look at these losing trades, one trade was executed at 10:09 and the RSI fell below 40. It then stopped out at 12:28. So this highlights the two basic problems with this strategy. Because we were waiting for the RSI to fall below 40, those conditions were not met until the end of this upward trend, which meant we were buying to open a position at the top of the trend, and then we had to wait until we were deep into the pullback, downward trend, before the position stopped out. So we're too slow to get in and too slow to stop out. If you look at the profile during these upward moves, the price profile, you can see that the RSI did indeed show weakness. It fell below 50, but didn't quite make it to 40, which meant that early buying opportunities in an upward trend were missed. So to address this problem, to try and buy into positions earlier in the trend, what we will do is we will adjust the RSI rule, say when the RSI drops below 50, and we will test two scenarios. One where if the RSI falls below 50, we will buy. And the second scenario is when the RSI falls below 50 and shows a little strength. So to test the first rule, let us modify this trade. So RSI below 50 rather than having to go as far as 40. In this one, I will reduce the RSI rising above 60 to RSI rising above 50. So anything above 50 is a sign of strength, and anything below 50 is a sign of weakness. We'll quickly backtest this. So it looks like this strategy would have performed better over the last week. And although it did go through periods of losses over the last day or two, it was not as bad as the other strategy. Let's just test the sensitivity to some spread on the opening price. So remain profitable with 2 pips of spread. Now I will just test another variation of this rule, whereby the RSI has to drop below 50 and then show some strength by making an upward move. So now I have 3 rules. Moving average has to be increasing, the RSI has to drop below 50, and then show some strength. So it has to be in the listed sequence. I will try it at 5 minutes. By setting the time frame to 5 minutes, that means that the 3 rules, the first and the last rule, have to be met within 5 minutes. So as these are minute based intervals, within 5 candles. So as before, we would like these rules to happen in the listed sequence, and we'd like them grouped together. So now we will test this. Okay, that looks better. So before we would have generated approximately $1,600. If we were a little bit more patient and wait for an upward tick, so for example RSI falling below 50, then making an upward move showing some strength after trending down, it would have been better. So let's test that with some spread. On a currency pair like the euro dollar, you should always test it up to approximately 2 pips of spread if you're using market orders. So it looks like it can tolerate some spread as well. So now we will activate these modified rules. So the basic principle is the moving average, which gives us our trend, should be going up. Then we want weakness, which is RSI below 50. And then we're looking for RSI to show some strength after falling below 50. So we want it to fall below 50, then form a V. So for example here, or for example there. We will keep the 40 pips. So let's activate this. And for our sell to open position, again, moving average, we want to be decreasing, RSI showing some strength, and then pulling back by 1. Again, all 3 nicely grouped together within about 5 minutes. So after creating a trade, you can back test it to make sure you've entered the rules correctly. Okay, it looks good. So now we wait. We should revisit this next week to see how well it has performed.